In this video, we're going to be going over the top 10 mortgage brokers in the country. We're going to be using Redder to kind of analyze the data as far as like what qualifies you to be a top 10 broker. Without further ado, let's get started. Excited to share with you guys some of the interesting data and growth trends for top 10 mortgage brokers. If you don't know me, my name's Thomas Meister. I am the sports agent for loan officers. Everybody deserves an agent. So if you're ever in need of a representative, hit me up. I would love to make sure that you have all the information you need to make a confident decision. We're going to be, let me share my screen here because this is very interesting when we're using Redder to look at the data for brokers, right? So there's only a couple criteria I've added so far. And hey, drop in the comments if you think that this is a fair way to evaluate mortgage brokers. Last week, the video that I posted was top 10 IMB lenders, mortgage banks in the country. And the criteria I used to actually try and evaluate them was 10,000 annual units, right? So brokers don't have the same kind of market share that IMB lenders do. So we're going to go with 4,000. And basically, we're going to look at companies that have over 200 loan officers. So technically there's 12, but curious if we should even be counting some of these companies, right? Because one of the things that I believe in is how focused is a company on purchase-based business, right? Nothing's wrong with refinances or home equity lines of credit. But if that's like the majority of what you're doing, then is the company's decision to focus or recruit or attract people doing that kind of business? Or, even if they have call centers, like people internally making phone calls, like last week, go check out the video and you can see who it was on the top 10 IMB lenders. But we're going to go with 4,000 units as our criteria in here, and only brokers, right? So we're basically just selecting brokers. And I'm interested that you need a minimum purchase percentage, but I'm going to leave it off for now. So that way you can see as we go through this, what changes. So this is sorted by the number of loan officers. And, there's only 17 companies that qualify, right? Meet the criteria right now. And UWM doesn't count, right? And this is MTH Mortgages a builder. So I don't know why they're on this list, but select portfolio servicing, right? Probably servicer, the loan store, they're a wholesaler that a lot of brokers use, do correspondent loans and broker through them. So I decided it's technically 12, but I think at the end of this, you'll agree with me that maybe not all these companies count. So number one, and I guess you could say if we resort this list, right? And again, we can't count UWM and we're not going to count MTH Mortgage. So number one, in terms of volume, right, is Barrett Financial Group. So what we're going to do is we're going to kind of candlestick these companies. I want to understand how their growth, how healthy is their growth, right? And we're going to kind of profile these companies. So the first thing we're going to do is look at them over the last 12 months. So in the last 12 months, net gain of 461 loan originators, an increase of $2.32 billion of annualized production. Okay, it's a healthy mix, you could say, of purchase and refi. They're doing refinances, but it's not the focus. Same with home equity lines of credit. Down here, this is the 12-month performance. This is like actual closings. Okay, so in the last 12 months, and it's probably slightly wrong here and there, right? So, okay, the data is the data. Let's work with what we have. About 10.7 billion. So this is, if you look at, this is if all the originators who worked there at that time had all closed their past 12 months business at that company. So last year, same time, they were 11.62 billion. Now, right, that $2 billion increase, they're 14 billion. So for what it's worth, I think it's worth looking at this and keeping in mind that data that we see out there, and this is true for the IMBs from last week, is it says they're a $10 billion company. Well, yes, that's terms in like actual closed business. Their current capacity, you could say, of the representation of who works there is 14 billion. This is an interesting thing I always like to look at, which is I just look at this line and say, 25 plus units per year. That's like 2 loans a month, right? And I get it. In some places in the country, you're all like, if you're not doing more than 2 loans a month, like you're not surviving. But in some places where the loan amounts are bigger, right? Like if you're doing 2 loans a month, you could be a $20 million producer, $30 million producer or more. It just depends on your product mix. So 15% of their originators do 25 plus units, okay? So now let's profile them and kind of candlestick this, right? If we look at the last week, they've grown by 96 million in the last 2 weeks, 152 million in the last month, 101. So it goes down, right? It's not as good. In the last quarter, $113 million. Okay. And the last 6 months, 1.33 billion. And in the last year, 2.32 billion. Okay. So it's undeniable that Barrett Financial Group, if you look at them and were to candlestick this, if it was a stock, they're doing really well. They're growing. Go ahead and throw in the chat if you feel, or comment below, like if you feel like there's something in particular that they are doing that is contributing to their success. But in the last 12 months, kind of undeniable that they are doing very, very well. All right. So number 2, we have NEXA Mortgage. So on here, right, they're coming in volume at the second best at 8.7 billion. And if we open this up and we're looking at 12 month, okay. So a couple of things we'll do again, right? 400 net gain in the last 12 months of $428 million annualized production, only 415 million. So if we kind of compare it, they're actually the same, right? Like if you were to, in the last 12 months, they've closed 8.7 billion, and their loan officers, right? Same time last year, they have more loan officers, but it's actually only slightly more production. And so, like NEXA attracts a lot more licenses, right? Like you can just see the difference here between them, right? So NEXA is a little bit more of a recruiting model, right? Like they have a downline, the ability to get paid on people you recruit. So I was talking with somebody yesterday and they mentioned that NEXA is known for a lot more than that today. But I think it's safe to say that the impression a lot of people got from NEXA was it's like a heavy place to recruit, and you can have the opportunity to make income on other people you bring in under you from the broker channel. And they're huge correspondent now. So they, that's actually interesting. By the way, if you want to spend more time analyzing this, go ahead and, here's their footprint based on where they do the most business. And you can see that they're doing most of their business now is broker correspondent, right? Non-delegated, mini core. So if you want to spend more time analyzing each of the companies, go ahead and do that. I just wanted to tease that for you a little bit right there, right? But let's kind of chart this. So in the last week, not a good week for NEXA, loss of 22 million. 2 weeks, loss of 62 million. Month, loss of 63 million, not as bad. Quarter, good, up 108 million. 6 months, 300 million. Year, 415 million. So their stock, right, is performing very well. Not as good. And as an organization, they're on pace to do only 415 million, which is a lot, by the way. Like that's a lot of production. That's really good. Considering their size that they were, it's, beauty's in the eye of the beholder. I'll let you kind of compare things, right? Because that's what this is. We're not trying to throw shade or talk bad about any company. The point of this is to just let the data speak for itself, okay? So coming in at number 2 at 8.3, which is basically a tie, you could say, with West Capital Lending, is Edge Home Finance. So let's see, 8.3, and for some reason, this is slightly different. So there must be a slight variance in where the data is technically coming from right there. Edge Home Finance, in the last year, up 135 loan originators for $731 million of annualized production. Healthy balance here, purchase, refinance, a little bit of home equity. All right. Oh, wait. By the way, NEXA. Just look at that. I missed it. And I was like, wait, I have to show this to you. Because that to me is a little sad. I mean, obviously they're doing great. So not throwing shade, but I'm just saying there are not as many big producers at this company as even Barrett, because Barrett's at 15%. So NEXA only being at 7%. Edge Home Finance, let's look at them real quick before we candlestick this. So Edge Home Finance having more of the originators who work there, a higher percentage of them. And again, it's not more originators because you can see, Barrett has 532. Well, they have 330 people who did at least 25 plus units. Okay. So even though they don't have as much production, right? So let's look at, and by the way, you can always click on this, right? If you want, click the link in the description if you want to check out Reddit and see, have access and play around with this more and dive into every rabbit hole. We don't have time for that in this video. So let's candlestick this really quickly, right? They're on pace, by the way. So this time last year, 9.83 billion for all the people who work there and 10.5 billion, right? So in the last week, Edge Home Finance, kind of flat, only up 2.3 million. 2 weeks, flat, you could say, slightly down. Month, down 11 million, kind of still flat, right? In the last quarter, up $278 million. Okay. 6 months, it's the same. So it's not as good. And year, 731 million. If you were to chart it out, they're doing well, but I would say it's more erratic than the other 2 brokers we've looked at so far. They're growing, but they're not growing like as steady a pace, right? Like Barrett so far, the only company that's like steadily growing, right? So hedge fund finance growing heavily, right, in the last 12 months. So now we're going to look at coming in, and technically tied, you could say, arguably, and might even beat them, because again, if we look at closings, because I don't know if we're going to totally focus on just this column right here, but West Capital Lending. So West Capital Lending, I've said this in previous videos, they're kind of like the rising star. Up until Cross Country Mortgage acquired Summit Funding recently, and some of the other companies that they recently acquired, they were on pace to be equal in growth to Cross Country Mortgage, the largest IMB lender in the country. So it is a heavily home equity line of credit. Like that's, crazy. And refinances. So it is purchase. They do some purchase, but it's not the focus. So they're growing, but growing in a different way. So up 608 originators, which is 72% increase, right? In the last 12 months. And 4.57 billion. That's over a 50% increase. Okay. That is kind of crazy, right? Like I understand it's a different type of business. I already said that, but it's still impressive, right? Let's look at producing LOs. It's actually higher, right? So it's 29%. That's the highest so far of the number of 25 unit plus originators who work at that company. Again, they're doing a different type of units. They're focused on refinances. So one thing you have to say out loud, this is part of the quiet part, is all business created equal? Is it as profitable? Because there is an important question to ask yourself is like, what did you net? What did you make? Like, what did you make? What did they make as a company to achieve this kind of growth? What did the originators, what are they making on those deals? I have some friends there. So sounds like they're doing well, but that's one of those things that just we don't have direct access to. Maybe someday I will. Maybe I can talk with some people and get you guys that information. So in the last week, down $11 million, 2 weeks, up 51 million, month, up 344 million annualized production, quarter, 1.13 billion, and 6 months, 2.69 billion, year, $4.57 billion. So as a stock charted, they are growing like crazy, exceptionally well. It's only in the last, I think, week, and did we say 2 weeks? Only last week, right? They had a bad week. So in 1 week, that might be completely irrelevant, but West Capital Lending on a massive growth trajectory. So West Capital Lending, based on the numbers, doing an incredible job, right? And growing like crazy. So coming in next, we have C2 Financial, and very close right here between C2 and eMortgage coming up. So C2 Financial, let's switch this to year. So C2 Financial in the last, definitely not as much growth as some of the others, but plus net gain of 64 originators for $147 million annualized production. And I mean, look at this, like they can only close 5.4 billion, right? But their people represent $7 billion, right? And they're up in the number of people, but that'd be interesting to know if this number has changed in the last 12 months, right? Because it says 12 months, but you can't change this number in Redder. Just hint, Redder. Maybe you could move this to show how this number has changed over a period of time. Only 11% of their representative originators who work there do more than 25 plus loans per year. So it's the lowest so far. And, for a $7 billion broker, and they're probably doing mostly correspondent just because, oh no, wow, most of their business is actually brokered. Oh, you know what? They're not doing correspondent. They're not a correspondent lender. So they're only brokering their deals, right? So that is an interesting find for C2 Financials. That means they don't have warehouse lines, right? So interesting. I didn't actually know that about them. So we both just learned something, okay? Drop a comment if you learned something, okay? I'd appreciate the comment. It helps the algorithm, okay? Let's see. C2 Financial, before we move on, if we look at them the last week, up 7.7 million, 2 weeks, 8.7 million, month, down 65 million, quarter, not as bad, down 37 million, 6 months, not as bad, down 62 million, and year up 147. So much more erratic. Okay. So if you were, looking at C2 Financial, it on a chart is definitely, it's up on the 12-month, but more recent not. And it's, they're growing, but they're not growing as much as some of the other companies on this list. Okay. So next up we have eMortgage Capital. Okay. So on here, $5.1 billion. And over here, just because I've noticed slight variation that that's almost the same, right? So our first company that in the last 12 months is not growing on the broker side, one of the largest brokers. So we're looking at top 10. So in the last 12 months, gain of 72 originators, net gain, but loss of $76 million of annualized production. They do a lot more refinances than they do purchase, right? So the home equity is a little bit more and the refinance is definitely more. So they're less purchase, but not as bad as like West Capital Lending in terms of, again, what does that mean? I'd love your feedback if you think that means anything. To me, it means something because it's just a focus on purchase business. But hey, go where the business is, right? To each their own. Beauty is in the eye of the beholder. What did you net? All right. So looking at the number of producing LOs, it's 13% of their representative. The number of LOs who work there did at least 25 plus deals in the last 12 months. And last week they're down 3 million. 2 weeks they're up 11 million month. Down, it's flat in the last month because that's one loan. Quarter up 56 million. 6 months up 258 million. So it's in the last year that it actually works out against them, going back that farther, right? So if you charted this and looked at it as a stock, right, they're down the last year and it's gone back and forth, right? So they're sliding actually, right? You can see right here, at same time last year, they were on pace. They're the people who work there. That's interesting. They actually have more originators, right? As a growth, the number of people who work there, but less production. So that's interesting. An interesting note there for eMortgage Capital. Up next, we're going to have Expert Home Lending, followed by the Loan Factory. And again, that's interesting. They've kind of all, like there's like, literally their rival, so to speak, right? We're not counting this one. So like Go Rascal, these two are closer, right? And these two are closer, and these three are closer, and these two are closer. Well, so I guess you could say, Barrett at 14 billion, right? And remember, this number is not exactly representative of all the people who currently work there, how much production they represent. We're looking at Expert Home Lending. Next. Expert Home Lending over the last 12 months actually down only 12 originators, but $60 million annualized production. Not a good look. They've closed 3.9 billion, closed 3.9 billion in the last 12 months, but the people who work there represent currently $4.82 billion of production. It's a kind of a healthy mix right here of refi purchase, home equity line of credit. Producers, 17% of their loan officers do at least 25 plus transactions a year. And let's chart this out. So in the last week, they're actually up 22 million. 2 weeks, not as good at 4.5 million. Month, 31.5 million. So better. Quarter, down 91 million. 6 months, slightly less down, $68 million. And year, $60 million. So not a very good performance as a stock, right? Because it's very volatile for them right now. So Expert Home Lending, are they technically the one that's sliding the most right now? No, technically eMortgage Capital. They have more people, but less production. Interesting stuff in my opinion. The data speaks for itself, right? It's the data. We're not throwing shade at anybody. We're just trying to help people understand how companies are performing these days. So next up, we have the Loan Factory. So Loan Factory growing a lot in the last 12 months, up 742 originators and $831 million of annualized production. And how many of the originators do more than 25? Ooh, okay. I'm just going to say is atrocious. That's really bad. That's the worst. Not only the worst so far, I would honestly just be all like, wow. Like they've been gaining a lot of bodies. It's going to take forever to load. If I click that, get a Redder subscription if you want to dive in the rabbit hole. But to me, I was like super interested instantly and like, okay, I need to start looking at the production of the people who are joining and leaving. It's a lot of growth. Don't get me wrong. They're on a huge, it's a 15% increase in production and a 41% increase in the number of loan officers who work there. But yeah, like in the last 12 months, they closed 3.4 billion. And now the originators who work there represent $6.35 billion. Okay, let's candlestick this, right? Let's chart it out. In the last week, down $23 million of production. 2 weeks, up $6 million. Month, $102 million. Quarter, a little bit better, $128 million. 6 months, $375 million. And year at $831 million. Annualized production increase, right? Loan Factory growing. Is it healthy growth? I don't know. I have opinions. I don't think it is. I'm just saying this is my speculative opinion, okay? I have an opinion about everything. It doesn't make me right, okay? All right. So up next, we have let's see. We're going to look at Go Rascal and then the Turnkey Foundation. And I guess you could say just like these two, well, these two are like what, 4 million almost apart. And these two, 300 million apart. So let's look at how they've been performing. So Go Rascal, last 12 months, up 128 originators, almost 50% growth, and $734 million annualized production. Healthy balance right here with refi, home equity purchase. And yeah, I mean, that looks good so far. 26% of their loan originators did at least 25 or more loans in the last 12 months. Let's chart this out. In the last week, they're up $40 million. In the last 2 weeks, they're up 135 million. Month, they're up 138 million. Quarter, 206 million. 6 months, 210 million. And years, $734 million annualized production. So Go Rascal is actually on as a stock, charted out, just growing, right? Every single time period, right? Week, 2 weeks, month, quarter, 6 months, year, they're growing. So that's an interesting, point right there to Go Rascal. As far as like, if you're evaluating one of these companies as like a place to land, beauty being in the eye of the beholder and not everybody's experience is shared, right? Like I have friends at Movement Mortgage. Movement Mortgage as an IMB has lost like how many billions of dollars? Like 3, 4 billion. And I have friends who like, they don't care. They're doing great. They're perfectly happy. But if you're looking at the data wondering like how is the company growing so much? Well, reach out to me and I'd be happy to connect you with somebody. So again, part of my value to people is that I'm going to make sure that you don't end up like with an inferior deal than you could have. I want to make sure you connect with the best person possible so you can understand the economics to their fullest. And unless you do have a problem being recruited, and I'm all for people making money, somebody may slide in, like some kind of override on you. Hopefully they're transparent about it. I can tell you sometimes I see where they're not. And who's to know that you're not getting as good a deal as somebody else who does a similar level of production as you, just because you didn't do more due diligence. So, all right, coming up next, actually, hold on, we did do this. Yes, 26%. Okay. So next we have Arbor, and because I know, right? So this is one of those DBA situations where the Turnkey Foundation is Arbor Financial Group, just like Everett Financial is Supreme Lending, etc. Right? So we have the Turnkey Foundation, Arbor Financial Group in the last year. That's wow, it's spot on, no change. Gained 64, lost 64, but actually gained $90 million of annualized production. Interesting. They're the first person to do that, where it's like flat one way or the other, but they're growing. So they traded less productive originators for better ones. Interesting. All right. So this time, so they've closed. So again, I think that's super interesting when you look at this and it says that Turnkey Foundation, 2.6 billion. And that's how probably most people see this when they're looking at this, right? Just like Barrett Financial Group, you look at them and you're like, okay, 10.7, but actually it's 14 billion. Arbor Financial Group is really a $3.3 billion company. And I mean, that puts them right on pace with some of these other companies doing the same amount of production. But you otherwise, that's why I did this, is because I think it's interesting to look closer. Like I just saw a post from, again, just based on the data. I think Robert Palmer, who's the owner of LPT Realty, did a post. And everybody does this. LPT Realty is a new growing company. When you do a post like that and you say we're the fastest growing real estate company out of all the brokerages, but right there on the same chart, you can look at Real and say, well, Real did more than double the transactions you did, and they're growing really rapidly as well. But it wasn't even like, it's like they have 29,000 agents and Real has like 20,000. So it's not even like they doubled your unit count to more than double your sides, the number of sides they did. They only had 8,000 more agents. And so data sometimes is important to look a little bit closer at sometimes people. Nothing wrong with that, right? It's real growth. LPT Realty is growing really rapidly. Just make sure that I like to be balanced in my data and my news. I don't watch the news anymore. Don't do that. That's going to be such a distraction these days. So in the last, well, hold on, let's click on producers. So 19% of Arbors, and I think that's actually a much lower number than some of these other companies as well, because they have less originators, but are doing production on par with some of these other bigger companies. I'm not going to go back and look at it. Get a Redder subscription and do that yourself, or just rewind the video actually. In the last week, 12.5 million in growth. 2 weeks, 36 million month, 38 million quarter, 50, or sorry, that's flat actually over the last quarter. So not as good when you go back a quarter, 74 million over the last 6 months and 90 million over the last year. So Arbor Financial Group, I would say even as like they have less loan originators than some of these other companies who have thousands of people, right? No, go ask, who was it? Okay, so Loan Factory. That's crazy, right? They're doing as much business as the Loan Factory with like, and half of what Expert Home Lending has. And I mean, they're on pace for 6 billion. So, it's not a fair comparison anymore. But to me, the data speaks for itself. Just keep in mind, how is a company growing? I believe that's important. The indecision is a decision because what it means is you're consciously making other decisions. So to be balanced and fair, we are going to look at UMortgage and United Lending Team. UMortgage, past year, down $1 billion and 65 originators. What percentage of their, well, it's actually more, right? So 28% of their originators do at least 25 plus units. It is a lot of refinance and purchase business. And let's chart this out. In the last week, they're flat. In the last 2 weeks, up 18.4 million. Month, 72 million. So I'm seeing a trend already, which is even though they're going back 12 months, down. More recently, in the last month, they're actually performing a lot better. But let's see if that trend continues. Quarter, no. In the last quarter, not as good. Down $250 million annualized production, 6 months, 600 million, and year, 1.1 billion. So they're doing some stuff recently for growth, but they're struggling over the last 12 months, right? So that's interesting, right? Charted out as like kind of a stock. I think that's interesting to look at. It's not performing well going back longer. They are making more of a splash, I would say, with their growth right now. So last we're going to look at for today, and I already see they're doing a lot of refinance business, is United Lending Team. So it's probably more lead based, right? Like getting leads, doing some refinances, not really focused on home equity as much, right? They're doing some, and purchase business, right? So over the last 12 months, up 113 originators, $684 million annualized production. Okay, how much business do their guys do? So 16% of their loan originators did at least 25 loans. So almost 2 a month. All right, let's chart this out. So they've closed 1.6 billion in the last 12 month closed, and the people who work there currently represent 2.3 billion. So in the last week, they're up 103 million. Wow, that's crazy. That's pretty big. 2 weeks, up $32.2 million annualized production. So not as good going back 2 weeks. Month, up 107 million. Quarter, up 240 million. And 6 month, up $353 million annualized production, and year, $684 million. So to me, that's very interesting, is it's a 53% increase in the amount of originators and a 41% increase in the amount of production. So it's very close, actually. And that's not been as balanced with a lot of these other brokers when you take a look at this list, okay? So I'd love your feedback. If you think there's another broker that should have been on this list because it didn't go down a little bit farther or did the criteria differently, let me know in the chat. Let me know in the comments. I'd love your feedback on this. Perfect doesn't exist. I can always make this better. If you made it this far in the video, thank you so much. I appreciate you. Make sure you're subscribed. Make sure that you like this video so that way more people can check it out and see it through the algorithm gods. So thank you, and I'll see you in the next video.